YouTube. Okay, yeah. So for those who want to join via YouTube, you can actually do that now.
Good evening, sir.
Good evening, Bashirat.
Please, I want to talk about, please, those people, some people, their camera is on, they should turn it off.
Okay, okay. Thanks for the observation. Please, let's quickly obey the rule of the game, right? And I've equally mentioned this at the beginning of our lecture, that we don't need to see your face actually. And if you know your camera is on, quickly off your camera, right? Even myself, I didn't on my camera now. So I don't see the reason why you have to, right? I don't see the reason why you have to on your camera. Distinguished professional colleagues, please let's maintain the principle, right? Please. Now, class, the question is, I have a question here. We should not forget, what is our strategy? Any day, anytime you see question, the first thing you need to do is to understand the requirement. Please, if you know that you don't understand that requirement, don't even touch it. Just leave it first and go for the one that you actually understand the requirements. And that is the reason I've given an example that is why you see some student coming back for a particular coming back for a particular course, right? It is not because they don't understand it, it's just because they don't know it. But sometimes the approach, right, may actually be wrong. So let's quickly look at this question before we continue our lecture, right? Before we continue with the next topic, quickly. So what is the requirement of this question? Now, this question is adopted from ACCA, right? I think whether BPP or Kaplan. Analyze as well as ICANN. Analyze the information provided and comment on the views expressed by the chairman in terms of growth in dividend per share, share price growth, earnings growth. Your analysis should consider both arithmetic mean and equivalent annual growth rate. Class, interesting. Don't forget, any day, anytime, they tell you to analyze. You should know that they are not telling you to calculate ratio here. They say you should analyze the information provided and comment. And we should not equally forget that objective, in order for you to meet up with the objective of a financial manager, right? It could be from ratio. I've mentioned it that it could be from comparative analysis. Probably they give you the year of 2024 and 2023. Okay, for you to know if there is a growth in profit, most especially investment ratio, to even check if there is any growth in the investment ratio, right? You just comment that, oh, there is a growth in this when you calculate the ratio. At the same time, the objective of the financial manager will be like, oh, maybe within it could be within the industry, right? Giving you the objective of a financial manager within the industry, or giving you that, okay, this is what we want to achieve at the beginning of our financial year. Now, in this question, they say you should analyze. You should know that, yes, it seems you want to do trend here. Growth in dividend per share, share price growth. Because for you to get a growth, it could be that you want to do a what? Not a ratio. It could be that you want to perform what? You want to perform a ratio and what is it called? Trend analysis. Share price growth. And your analysis should include both arithmetic mean and equivalent annual growth rate. We'll get there. Then lastly, This is 15 marks. The 5 marks discuss the factors that should be considered when deciding on management remuneration package. It means that when you want to determine the remuneration package of Basirat, what are the things that we encourage the director of TP to maximize the wealth of shareholders? Class, discuss the factor that should be considered when deciding on a management remuneration packages. If you want to determine the management remuneration packages, what are the things you need to consider? If at all, let's say for instance, below Basirat, she is part of the management. So what are the things you need to consider in order for you to encourage Basirat in order to maximize the wealth? What are the things you should be considered when deciding on these packages? What are the things you should look at from Basirat? What are the things you should look at, right, before, like, deciding on the management remuneration packages? And this gives about how many? This gives 15 marks, right? This is 15 marks, total marks 20. So quickly, we read the body of the question. As assistant to the finance director of is it Tanko? Okay, maybe Tanke or Tanko, anyone, right? Tanko PLC, a company that has been listed on the Nigerian stock market for several years. You are reviewing the draft annual report of the company, which contains the following statement made by the chairman. Oh, the chairman has made a statement. Now let's check. What is the statement of the chairman? Now, this company has consistently, this is chairman's statement now. This company has consistently delivered above average performance in fulfillment of our declared objective of creating value for our shareholders. Interesting. This is the chairman comment. Apart from 2017, when our overall performance was hampered by a general market downturn, this company has delivered growth. Now, the chairman is saying that everything we have been creating a value for our shareholders, apart from 2017, when there is economic downturn. This company has delivered growth in dividends, earnings, and ordinary shares. According to the chairman, our shareholders can rest assured that my director and I will continue to deliver this performance in the future. That is the chairman's statement, that this is what they have done apart from 2017. Class, you cannot just read the chairman's statement and assume that, oh, the chairman's statement is actually right until you do your analysis. The financial year summary in the draft annual report contains the following. You could see the dividend per share. According to this chairman, the chairman has actually made a statement that the dividend, earnings, and share price, there is a goods, there is overall performance. There is, okay, this company has delivered growth in dividend, they've delivered growth in dividend, earnings, and not, but if truly looking at it financially, without looking at it as a perspective of a financial analyst or an investment analyst, when you look at it, you look at maybe you are not looking at it in that part. Maybe you are looking at it like someone who is just, oh, figures, someone who can look at figures and say, oh, they are doing well. Look at it. 2017, 2018, 2019, 2020, and 2021. You could see some kind of growth, but not like that though. But the chairman has already said it, that they are doing well, according to the chairman. Now you could see the earnings per share, then price earning ratio. Class, we have general price index. If I may ask a simple question, class, what is price index? Class, what does price index represent? What is price index? Class, general price index, anyone? What is general price index? Class, What is general price index? Who can try? Okay. Adeyinka.
Hello.
Adeyinka.
Yes.
I'm listening.
Index is a measure of relative change in price over a period of time. For instance, price index shows
you could say
average
okay, thank you.
change general price level.
Thank you. We could say the price index mentioned inflation. You can use a price index when you want to adjust for inflation, right? You could say that it is used for adjusting inflation, right? For those who are in PM class, we actually did high and low with inflation. Now, if, for instance, if your salary is 60,000, you receive 60,000 on a monthly basis, you look at it, right? That is why one of the LinkedIn influencer mentioned that, oh, maybe some Nigerians are suffering from money illusion. If you look at money in money term, you don't look at it in real term. You have 15 naira, you receive 60 naira as salary. You look at it, na big money, 60,000. Now factor in inflation, deduct inflation as of today. As of today, inflation, according to the Nigeria Bureau of Statistics, is about 22.2%. Babalola, please mute your mic. Off your video, please. Now, as of today, it is 22.2%. Factor in that 22.2% in that 60,000. You will realize that in real term, you are earning 55 to 56,000 naira, and it is what it is. Now, why I quickly divert to that part is because we will as well look at that in this question. Now, a recent article in the financial press reported the following information for the last 5 years. For the business sector within which, so now look at it. The business sector at which the TP operates, class, this is what they have. Class, when you want to achieve objective, when you're talking about objective of a financial manager, another way you could use, if you don't want to set an objective for the company, or you don't want to do a comparative analysis for you to check if the company is actually creating a value for the shareholders or not, you could as well use a business sector, an average business sector. You look at company that is operating similarly, right, with that company, and use it and check that, oh, what is the share price growth of this company over the last few years, and what is the share price growth of your own company you are performing an analysis on. Then look at it. Oh, tactically, have we created value for our shareholders? That is another question. So this is another way you could use to achieve that, to test if you are actually adding value or if you are actually creating value for your for the shareholders. Now you could see the business sector at which they operate, which is the average business sector. The share price growth, average increase of 20% in the sector, in the business sector. Now the share price growth will be increasing 20% per year. Earnings growth, nominal dividend, and real dividend. Now, we need to understand the difference between nominal dividend and real dividend. The question now is, what is nominal dividend? I've given an example of someone earning a salary of 60,000. I'm earning I'm earning more money, Abi, at 60,000 naira. As of today, inflation rate is about 22.2. You have to factor in that inflation. Now, what I'm saying here is that when, as an investor, you invested in one of the bank financial institutions, it could be Jitco, it could be Zenith Bank, and they give you a dividend of 5 naira per share. 5 naira per share. Now, that 5 naira per share is what we call nominal dividend. Why? Because you have not factored in inflation. You have not adjusted for inflation. If you want to adjust for inflation, you could use what we call price index for you to actually adjust for that inflation, right? Now, that is nominal dividend, class. That is nominal dividend. That is, if the company say, oh, we will give you 3 naira per share, that 3 naira per share is what we call nominal dividend. It is because you are here to factor in inflation, right? Now, when you adjust for inflation, you will discover that 5 naira per share could be 4 naira per share because you have adjusted for inflation. And that 4 naira per share, it is what we call real dividend. That is real. So in essence, as a financial expert or as a financial analyst, you should be able to look at it that you are not looking at money in or dividend in real, in nominal term or in money term. Look at it in real term, in actual sense. Can we actually have this? That is how you should be what? You should be thinking like that, right? Now, you may assume that the number of shares issued by TP has been constant over the 5 years period. All price earning ratio are based on the end of year share prices. Class, you could see the requirements, right? The growth in dividend. So we need to analyze the dividend to check if they actually meet up with this business sector as claimed by the what? By the director, by the chairman. Now, remember that the chairman is saying that they have consistently delivered growth in dividend earnings, right? Internally, there may be a growth in dividend earnings per share, but the question is, what about the competitors, the business sector? Are you actually achieving that objective? Because as an investor, when you want to invest in a company shares, you need to do what we call fundamental or technical analysis. You look at it, you compare it, look at other companies, and do some comparative analysis and use it to make your decision. Either you go for A or you go for B. Now, analyze means you are to use strength for you to get growth in dividend, because you need to check this. Is it that nominal dividend, or as well as what the real dividend, share price growth, and you need to check, you need to confirm if there is any growth in this dividend. Can you see the dividend per share given to us? You need to confirm if there is a growth in dividend. Now, if there is a growth in the dividend, does it actually meet up with the business sector? That is the question we were to do. Okay, how many percent do you have as growth? Did you meet up with the business sector, right? And you need to do what? You need to comment on it and comment on the views expressed by the chairman. So which means that when you do growth in dividend per share using trend analysis and you compare with the business sector and you look at it that, oh, there is no growth, you could say that in your comment that the view of the director or the view of the chairman is not actually correct because it is actually below the business sector. Class, am I communicating? Who is against me in this class? Suggest a solution. Hello, am I communicating?
Yes, sir.
Yes,
Wow.
yes, sir. Yes, sir.
Yes, sir.
Perfectly, yes, sir.
Because I've said a lot of things, so I beg no verse, right? It is who I am. Actually, I needed to expand so that you have the understanding of financial management. Don't be scared of anything. There's nothing, whether I can change syllabus or not. Just don't prepare yourself that you can do it, right? I always believe in understanding. Have an understanding of that topic. Once you have an understanding of that topic, there is no question. There is no question they want to bring. You'll be able to do what? You'll be able to tackle it, right? Stay away from those guys, some people that have negative energy, that say this is difficult, this is difficult, this is that, this is. But some people are actually passing this particular course. So why will you keep saying this is difficult, difficult all time? Stay away from those people who have a negative energy and stay with those who have positive energy, who are positive minded. That say yes, it is not difficult. Yes, I can do it. You tell yourself. You challenge yourself, right? So please, and it is what it is. Please, it is what it is. Now, if we look at it, so suggested solution, please, our principle, don't forget the principle, the name of the company, after your suggested solution, Tanko PLC, Sanko PLC, right? So the first, what we have to analyze first is growth in dividend per share, class. And the question is, we have the nominal dividend growth, then we have the real dividend growth. Class, let's start with the growth. Let's start with the nominal dividend. I've explained. Who can quickly explain what is nominal dividend? What is nominal dividend?
A dividend paid without reference to inflation.
Thank you. See, even a market woman, right? Even a market woman can understand that simple definition. I give you 50 naira on a monthly basis as monthly take home. That 50 naira I'm giving you is just in the money. It's just a money term. It is just ordinary, and which when you look at it, it will not be enough for you to do whatever things you want to do, right? Thank you. That is a very good one, right? So growth, the first one is growth. Oh, what happened to this thing now? Jump. Okay. Growth in dividend per share. So we are looking at growth in dividend per share. We'll be looking at the nominal dividend first without adjusting for the inflation. Thank God they're giving us the price index. So nominal dividend first, right? Now, in this, we have to do ratio trend, right? Because they say analyze. Okay, Roma figure 1. This is Roma figure 1. Right? Roma figure what? Roma figure 1. Okay. So please pay attention. So as we do, right? As we normally do the trend, okay, 2021, we have 2021 to 2017. 2021, 2020, 2019, 2018, 2017. So this is what we have here. Now, we move. I need someone to be telling me, calling the figures. For those who have the material, you can quickly check. Can you see it? I need someone who will be giving me figure for this. So I will not keep on scrolling up and down, right? If you don't have the material, you can just screenshot this part. But I will advise you to get one, right? So now
2021, 28 dividend per share.
Okay. Minus, what is the previous year?
The previous year is 2023.
23 naira per share divided by 23 naira per share. So this multiplied by 100 will give you the percent. So 2023, 2020. So what is the base year? 2019 dividend. What is the 2019 dividend, class?
22.
22 divided by 22. Okay, that's fine. So this is 22. What is 2018 dividend? What is
22
2018?
dividend per share.
22 naira per
Dividend per
share.
share.
Now, you can see that in 2018, we don't need to trend 2018. Do you know why? Because, is it 2018 or 2017? Oh, thank you. We need to do the trend though. 2019, what is 2019, sir? Okay, 22.
2019 is 22 dividend per share.
22 minus, what is the old? What is the old?
Old 17 kobo per share.
Per share divided by 17 kobo per share.
Yes.
For those who are just joining us for the first time, I didn't introduce myself, sorry. My name is Ibrahim Akindele, and I will be taking you 100% of financial management. And once again, you are welcome to Next Gen Professional Associate. You are welcome. Now, 2017, because we don't have the base year, the previous year of 2016. So automatically, when you are given maybe 5 years and you want to perform, you want to check a growth using trend analysis, right? Now, it means that you will just do for 4 years. If you are given 6 years, you have to do for 5 years because you will not, the base year, the previous year information will not be given. So this one will be nil. So class, what do we have here as the nominal dividend for 2021? Quickly, class.
0.22.
How many percent?
Oh, 1%.
Just give me the percentage.
22%.
21.47%.
Someone is having 21. The other person is saying 24. The other person is saying 23.
22%. 22%.
Put the formula. Put the formula right so that before you can have the percentage.
So what else do we have?
Put the formula right, please. Otherwise, we don't know how.
4.55%.
I don't understand. I don't understand that language. I should put which formula right, please.
Before the 22% we arrive at, we just have 28 minus 22 over 22. You say it's equals to 22%. Somebody copying may not understand, like new people are joining.
You can actually do that. The person that is listening can actually do that, right? In my formula, I've actually said times 100, right? So the person can say multiply by 100. You are actually right. And the person can ask question that, why is it 22%? Is it not supposed to be 0.something percent, right? So please, thank you. Please, you can always multiply by 100, right? You can multiply by 100. Thank you so much for the observation. Thank you. So next, 20%. What do you have? 2020, what do you have?
4.55.
4.5%. One is having 4.59. I beg now. So what do we have? This is 0%.
Sorry, I thought we are rounding it off to a whole number, like 20%.
I don't know.
This is 5%.
Hello, you know I'm not with calculator, so I don't know if you are rounding it up to one.
No, like the first one is 21 point something percent. So we rounded it up to 21.74. So this one should be 5%.
The first one should be 21.74%.
21.7. Let's say 21.7 in one decimal place, right?
Okay.
So,
okay.
2018. What do you have?
The second one is okay like that. It's okay. 4.5%.
It's okay. It's okay.
So 2018.
29.4.
29.4. 29. Okay. Bashirat and Abidemi Sanusi. Bidemi, are you here? Are you still with us?
Yes, I'm here.
Okay, please. Both of you will be giving me figures. right? Why others will be at the background, right? So let's do it that way, please. Yeah, thank you. So what do we have here? 2018, what do we have? Kudus, you can also give
29.4. 29.4.
29.4. Okay, now with this now, because the question says that analyze the information provided and comment on the views expressed. Please mute your mic and comment on the views expressed by the chairman in terms of growth in dividend. We have done that. Don't forget that the question equally says that your analysis should consider both arithmetic mean and equivalent annual growth rate. We will do that. Please, we will do this part separately. When we are done with the growth rate, the growth analysis, we'll come back to arithmetic mean as well as equivalent annual growth rate, right? Now, we are done with the nominal dividend. According to the view of director is saying that, we have done well. The company growth, deliver growth in dividend earnings and ordinary shares except in 2017 when they experienced what is it called, economic downturn. Now looking at this for the purpose of comparison, right, looking at it now with the business sector. Now the nominal dividend nominal dividend growth per year is what? 10%. The question is the view of the director, is it actually correct, or is it actually correct or not? Based on what we calculate, is the view of the director actually correct?
10%.
This
Okay,
is
let's see.
10%. Is the view of director actually correct?
No.
No,
In some
No.
years, correct. Not all. For
Comment.
2021 is correct.
Comment.
2021 is correct. 2018 is correct. Others are not correct.
So we can say from the above up now. Why this thing is jumping? Please, if you want to ask question, not now. Just keep that question. Just keep it. You get, when we are done with our analysis, you can ask your question, please, so that we can move up now. Oh, okay. Okay. Oh, please, a minute. I don't know what happened to this. Okay. From the above analysis, the view of the director of the chairman in the view of the chairman for the year 2018 and 2018 and 2020 and 2021 is correct, right? Why 2019 and 2020, right, is not correct. The the goods, or this indicates, or this shows that nominal dividend is only nominal dividend or goods. This shows that goods in nominal dividend between 2018 and 2021 is below the business, is above the business sector, right? Is above this business sector. So if you want to expand, don't forget that they only need your comments on the views of the chairman, right? So the view we could not, because of adequate information was not provided, we could not establish the reason why the nominal dividend did not meet up. We did not meet up with the business sector, because we're given a limited information. So we could not say, it could be as a result of this. Class, am I communicating, please?
Go ahead.
Yes, sir.
Okay, now we are done with this part, right? So we can actually merge the two together, right? Instead of separating nominal dividend, then we come down here and say real dividend. Oh, this shows that growth in nominal dividend is above the business sector. Let me indicate of how many percent of 10%. Let me state it so that we know that we are comparing the nominal dividend with nominal growth with nominal dividend, right? Good. Nominal with nominal and real with real. So let's quickly check real dividend, right? 2021, 2020, 2019, 2018, and 2017. Plus, this is the real dividend, which means that this dividend that they have as 23 naira per share, right? Are all their nominal dividend. So we need to adjust for inflation for us to actually arrive at real dividend, right? Now, if you want to arrive at real, right? Normally, if you want to arrive at real, your price index is will be equals to the nominal, right? Maybe the nominal figure that you have, maybe the nominal inflation that you have, divided by 1 plus inflation rate. This is how to adjust for inflation to get the nominal. But because of, you don't have to stress yourself, they've given you the price index, right? They've given us the price index. Or let's say, no, this is not correct like this. Let me use real. Yes, let me use real. Why this here? What you have here? What you have here is what you call price index. the denominator. Your 1 plus inflation rate is what we call price index. The denominator, class, please take notes, is what we call what? The price index, the denominator. Now, with this now, class, with this, now since the nominal dividend is given to us from the question, the inflation rate is not given to us, right? But we can have a price index if they don't want to. If you did not see one inflation rate, you can use a price index / price index, because you can use that to actually what? Adjust for what? For inflation. Hassan, please, who is that? The person should mute his mic, please. Please, we are beginning to violate the rule, right? Please. Okay. Now, if you have this now, so what is the nominal dividend? So we need to convert. We need to get our real dividend. Come in. So what is the nominal dividend? 28, 23, 22, 70. Is that not so? Then we're given the price index. No inflation rate, but we're given the price index. So the price index will represent the inflation rate, will represent your 1 plus inflation rate, right? Since there is no what? Inflation rate. So on this, we can have 2021 to be 28 naira divided by, what is the price index for 2021? What is the price index for 2021? 117, right? 117. 117. So class, this will give us our real dividend. So we move to the next one to be 23, which is the nominal dividend, divided by, what is the price index given to us? What is the price index?
113.
So we move again to 22, divided by, what is the price index?
110.
110.
110. We move again. 22 divided by, what is the price index?
105.
105.
105. Okay. 105. 105. So we move 2017. What is the nominal dividend?
100.
100.
So what is the
No, nominal dividend is 17.
nominal dividend is 17
divided by
The
100.
price index is 100.
Okay, thank you. So you need to get your real dividend before you talk about growth. Class, you need to get class. You need to get your real dividend. So when you divide, what do you have? Please divide it. What do you have?
23.93.
23.9. Next.
20.35.
20.35. Next.
20.
20. You could see that when you have adjusted for inflation, what did you observe? You observe that what you claim to have, you can see from 28. So which means that if they pay you dividend of 5 naira as of today, you have to factor in inflation and say, what is the real dividend? Because that is how financial, if you want to become an investor, you look at it in real term, not in money term. So what do you have here?
20.95.
20.9. 20.95. Okay,
95.
Let's say like this. Okay, 20.95. Okay, that's fine. So what do we have here?
17.
17. Now we can now do our ratio. We can now do the trend. You can now do your trend, new minus old, to check for the growth rate. Class. So I will be leaving the comment for you. You do that in your notes, right? So that we will move, right? You can do the comment. We've been doing comment, right? It's just for you to check if it is either above, if the view of the directors is actually correct. For you to know, you need to check it. Oh, from your analysis, is there any growth in real dividend while comparing with the business, what? The business sector. Now, on this note, we can have, 2021 equals to, right? New minus 2021. What is the real dividend? 23.9 minus, what is the base dividend, old dividend, which is 2020?
21.7. 21.7.
I don't understand. Where did you see
No, that's
21.7?
20.35.
20.35
20.35.
divided by
Okay, 20.35.
20.35. When you multiply by 100, you have your percentage. But Basirat, please be calculating, just be giving us figure, the final figures there. Do you get? Thank you. So this is,
Okay, sir.
yeah, thank you.
Sorry, I'm not
20.35.
seeing the board again. I'm not seeing the board.
You're not seeing what? It's from your network, please.
I'm not seeing the board though.
From your network. Thank you. So 20.35 minus 20 divided by 20. If you multiply it by 100, you have your figure. 2019, 20 minus 20.95 divided by 20.95. This 2018, 20.95 minus the base divided by 17. When you multiply by 100, so 2017 will be new because we don't have 2016. So class, Basirat, what do you have here? 2021, what do you have? What is the real dividend growth?
17.44.
17.44. What do you have here?
1.75.
1.75.
You've multiplied by 100.
Yes, sir.
What do you have?
1.44. 1.75. Sorry.
1.75. What do you have here?
Minus
4.5.53. No. 4.53.
negative.
Bashirat.
Yes, sir. Yes, sir.
Please give me your figure. Hello, please. Please, others should just mute your mic, please. Please. Thank you. So, minus 4 point what, Basirat?
A minute, sir. I'm coming.
Okay, that's fine. Kudus, what do you have? What is the percentage? Kudus.
Minus 4.5.
Okay,
Is
Bidemi, thank you.
minus 5.58. 5.59. That's what I get.
Minus 4.53.
Okay. Oh, it seems I'll be
Excuse me.
I'll be bringing calculator to this class. Okay, so that when you give me wrong figure, probably maybe when you give me one figures, I doubt that figure. I can just use my calculator sharp to calculate
Okay, that's correct. Is minus 4.53.
4.53.
So,
53, yes.
excuse me.
So
Can you hear me?
please, I'm coming. I'm still
Your
I'm still
screen, please.
solving. When I'm done, you can actually ask your question, please.
It's not
Please.
question, it's this I'm talking about. So that we can see what they are doing.
Basirat, can you see my screen?
Yes, sir.
Abidemi, can you see my screen?
Yes, yes.
So I
So
can see your
please,
screen.
if you know,
I think it's the network.
please,
So I
if you
can
know,
see your screen.
please, thank you. Please, if you know you are not seeing the screen, just log out and log in so that you will not use that to actually disrupt our class. Please, just log out and log in. Right? If like 5 students can actually see my screen, so you just have to check from your own ends, please. Thank you. So, what do you have here? 20.95. What do you have?
23.24%.
23.24%.
23.24%.
23.24%.
Okay, that's fine. Now, we could see, can we see the real dividend growth? Real dividend growth, right? Real dividend growth. Now, the question is, you could add that to your comments for the nominal dividend, right? And you state that, oh, the real dividend, okay, looking at real dividend, let's check. What is the real dividend percentage? 9%. Please, you should be writing now. I will not write that one. You have to, that comment, you have to write it. Yes. You can see that this is 9%. Do they actually achieve a growth of 9% on year basis? Let's check from our analysis. Now, you can see it was achieved in 2021. It was achieved in 2018. You could state it that the view of the narrator is actually correct in that year. Looking at the real dividend. What is that now?
Mute your mic, oh.
Okay, I think I have to be okay, maybe I know what to do going forward. That's fine. So, the real dividend of 9%. So you could add it to your comment by saying that looking at the real dividend, the view of the chairman is actually correct in 2018 and 2021, why others are not correct, right? We don't really know what could have happened, for the company to have a negative growth rate. It means that there is kind of the dividend, there's something occur in that year that make them not to achieve, that make them to have a decrease in what? In dividend. You could see this negative indicates that there is a decrease in the real dividend in 2019 class. And that will be your comment. So class, are we still together, please? Are we still together, please?
Go ahead.
Yeah.
Go ahead.
Thank you so much. So the next thing we need to move on to is Roman figure 2. Roman figure 2, we must complete this question tonight. If not, I'm not coming back to this part of objective, right? So we must complete the question. Thank you. So what is the next point? The next point is share price growth. So we need to check if the view of the directors is actually correct while comparing with the business sector or industrial average or industry average. Let's just call it, we can call it industry average, right? While comparing with what? The industry average. So share price growth. We still have our new minus old usual. Let's check. Now, if the question says share price, the question is, what is share price? Share price means market price. Class, share price is market price. Let me put it. Market price. You want to check. If you go to NGS today, if you check the market price of maybe MTN, right? Or JITCO, maybe JITCO to be maybe 97 or 93. That is what we call market price. So in this question now, let's quickly check. We're given a share price growth of 20%. We need to compare if there is a growth on year-on-year basis. Now, from the financial summary given to us, you could see that there is no share price. There is no market price here. The question is, how do we determine the share price? Which formula can we convert that can give us a market price? Class, which formula can we use? Is it dividend per share? Is it earnings per share or the price earning ratio? Because we need to get our market price. When we calculate our market price, we can now trend. Now, in the financial summary given to you, the market price is not given, but we're given the dividend per share, earnings per share, and price earning ratio. The question is, how do we determine market price? Class, what should we do? Who can try? Okay, Michael.
I'll take any per share. Can you use any per share?
Oh, from the earning per share, you mean from the earning per share you can get market price? No. Earnings per share, the formula for calculating earnings per share is profit after tax divided by the numbers of shares. Did you see market price there? No. So it's not correct. Sanusi?
Isn't price earning ratio?
Okay, price earning ratio. That's fine. Kudus?
Yes.
Yes,
Kudus?
price earning ratio. Price to
That's
earning
Thank
ratio.
you.
Yes.
Thank you. So in the price earning ratio, you could see market price. So it's just for you to make something the subject of the formula and you get your market price. Now, to get market price first, we use price earnings ratio. The formula for calculating price earning ratio is equal to, that is why it is called price earnings. Price is your market price. Earnings per share. Price earnings divided by earnings per share. Now, this is the formula that include market price. So you just have to reason that which of these ingredients given to you, you can see market price. Class, you just have to reason. Now you can see market price in price earning ratio. Of course, in dividend per share, the formula for calculating dividend per share is dividend divided by the nominal numbers of shares. Dividend per share. Dividend divided by the numbers of shares. That is dividend per share. That is why it is called dividend per share. The dividend divided by the numbers of shares. Now, if you look at it, divided by price earnings, which is earnings per share, right? Now, in this now, how do we determine the market price? You know, from our SS3, right? Let me pick it from SS3. We usually do something. And what is it? Subject of the formula, right? Thank you. We cross multiply. Thank you. You cross multiply. That is a very good one. So in this case, we can have market price. Thank you. Market price is equals to price earning ratio. Price earnings ratio multiplied by earnings per share. So if you multiply these, you will have your market price. So we have to do this for each of the year. First of all, we need to get the market price. Once you get the market price or the share price class. Now, once you get the market price, you can now do what? You can now trend, right? So we start from 2021 to 2017. Please, I want to see your comments immediately after this class. Please, I want to see your comments. Make sure you are writing. Maybe in our next class, everybody, you first of all on your video first. Let me see if you are writing. Because you must write. Is that not so? You must write. Now, 2021, 2020, 2019, 2018. Right? Do we have 2017? Let's check. Oh, 2017. Okay. So we move. So market price equals to earning per share. So what is the price earning ratio for 2021? What is the price earning ratio, class?
22.
22 times is in ratio, right? 22 times. What is the earnings per share? What is the earnings per share?
190.4.
190.4. What do I have here? Next, what is the price earning ratio?
33.5.
Can you see the price earning ratio, right? It is not magical. 23.5 times
33.
Okay, 33.5 times. What is the earnings?
149.50.
149.5.
50.
Next.
29.5.
49.5.
No, 25.5.
So what is the earnings per share?
112.20.
112.20.
2.20.
So what is the price earning ratio for 2018?
17.2.
17.2. What do we have here? The earnings per share?
158.40.
158.40. So what do we have here?
Please, somebody should help us to calculate so that I can write.
2017, what do you have? Price earnings ratio?
15.2.
15.2.
15.2 times, what is the earnings per share?
134.30.
134.30.
30.
134.30. So, Bidemi, Kudus, what do we have when you multiply?
4,188.
4,188.8
4,000.
188.8.
188.8.
0.80.
What do we have here?
5,307.25.
5008.25.
I'm coming. Please, just one person, please. 5 what?
5008.25.
No, 53.
5008.25.
5008.25.
Okay. 2019.
3309.90. 3309.90.
3309.90.
No, it's
Point nine.
Sorry, that's
2061.1.
2019. That's price
2000.
earning.
Hello.
Price earning ratio.
2061.1.
Hello, it's okay. It's okay. It's okay, please. Just everybody should just mute his mic, please. Bidemi. Bidemi, what do you have? Kudus.
It's 25.5.
That's what I have, sir.
Sorry, there's a mistake in the price earning ratio. It's
2019. 2019 is 25.5.
Okay. So what do we have?
2861.1.
2861 point what?
1.
So next, what do we have?
2724.48.
2724.48.
724.48.
Next, what do we have?
2041.36.
2041.36.
0.36.
So we can now do the trend. We've calculated the market.
041.
You say
041.36.
041.36. Thank you so much. So we've calculated the market price. We've already calculated the market price. I don't know why we just want to. I don't know. See, if you're not talking, just mute your mic. Just a simple instruction. Just mute your mic.
Sorry, sir. The earning per share in 2017 is 134,000. 134.30. You wrote 34.30.
So what do we have here?
The answer is correct.
So if the answer is correct, we move on now. You can always do all
It's
these
not
things.
correct. It's not correct.
Hey, give me the correct answer, the correct figure.
The answer is correct. Let's continue. The
Correct.
answer is
Now let's
correct.
continue.
Okay. I think I'll be coming with calculator, right? So I can just calculate some of these things by myself, right? So how can we have 72 participants and I don't know. But that's fine. That's fine.
You give people permission to be doing it. They should, if they are not, maybe some people can help them. Just identify those who are even good at that calculation.
I've identified, right? I've identified Kudus, one, Abidemi, and Basirat.
They should take up the challenge.
Yes, they should take up the challenge. Exactly. Others should just mute your mic.
They are even the one confusing us.
What if they are wrong?
Sir, please, let's continue.
No, they should do it simultaneously. If two of them agree on an answer, we know that is correct. They are three, but if two agrees, we know it's correct. Go ahead. That's how to do it. Thank you.
Okay, that's fine. So, interesting. You always see diet on diet. You always see new things, but it's fine. So this is 2021, 2020.
Hello, are we still on?
Hello.
I think it is his network.
Hello.
Hello, let's try the old and new formula before he returns back. At least we can solve that before he returns back.
Hello. Please confirm if you can hear me. My network.
We can hear you, sir.
Yes,
Okay.
we can hear you.
Oh, we can hear you now.
Okay, that's
We can hear you now.
Okay, that's fine. Thank you. That's fine. That's fine. Okay. The thing is, okay, let's finish this so that I can say something, right? So, the next is 5,008.25 minus 2,861.1 divided by, please, Abidemi, Kudus. I hope you have your figures, right? Please, I need it. And Basirat. What do we have? 2019. 2,861.1 minus 2,724.48 divided by 2,724.48. 2018, 2,724.48 minus 2,041.36 divided by 2,041.36. So the last year is new, right? So, Abidemi, Kudus, what is the percentage? Quickly.
Minus 16.36%.
Minus 16 point what?
0.36%.
36. So it means that the market price actually decreased. If you look at it, if you look at the trend from 2017, 2018, 2019, 2020, you can see 2020 to 2021. You can see when the market price was 25,000 days, it becomes 4,000. That is why you have a negative. It means that the market price actually decreased. So the objective was not actually achieved by then. So what do we have here? 2020?
75.05%.
75.05%. So what do we have here? 2019?
5.01%.
5.01%. So what do we have here? 2018?
33.46.
33.46%. Thank you. So if you have 33.46%, your comments. So please, I want to see your comments immediately after this class, please. Comments. As per the view of the director, so that you can earn your full mark, right? So after the as per the view of the director, you could see that the market, they said from the business sector you have 20%, right? So you could say 20%. So did they actually achieve that? Yes, they actually achieved that above the 20% in 2018 and 2020, right? Why 2019 and 2021 was not actually what? Correct. Because it is below the industrial average or the industry average of 20%. And that is what we are to do when it comes to objective of the financial money. Either you are comparing your own objective, that this is what you want to achieve, or you look for competitor or the industry average and check, are you actually adding value or creating value for the shareholders, or you do a ratio on year basis to confirm if you are actually adding value for the company. Please, I want to see your comment immediately after this class so that we can move on, right? Now, the next thing, all right, lastly, on earnings growth. So you can mute your mic, right? With that, you can mute your mic. Earnings growth. Earnings what? Earnings growth. Please, can you hear me? Are we still together?
Yeah.
Okay. Okay. So earnings what? Earnings growth. Earnings growth. Right? Earnings what? Earnings goods. Earnings goods. Okay. So we do the same thing for earnings growth. Right? My focus is just that arithmetic and this. Right? So that we can move ahead, right? New minus old, right? Okay. So let's quickly check if there is growth in earnings. Is it earnings per share? That is earnings per share, right? Earnings growth. Earnings per share. Okay, that is earnings per share. Earnings growth is your earnings per share, so that you will not be looking at it. If you see it in your, if you see it, you will not be saying, what is earnings growth again? It is earnings per share, right? So we can have 2021. When you see a question like that, you just have to, that is why you need to understand the requirement first. It is very important. 2021, 2020, 2019, 2018, right? Now, what is the earnings per share? What is the earning per share? Okay, let's do new minus old for 2021 class. Give me figure. Hello.
190.40.
Okay. 190.4.
0.40
What is the
minus
earnings per share? Okay. For 2020.
149.5.
149.5
9.5
divided by 149.5. So next we have 149.5 minus, what is the old? What of 2019? What is 2019? Earnings per share?
112.20.
112.2 divided by 112.2. Vivian, are you in this class? Okay. 112.2. Abosede. I'm not sure she's in this class as well. 2018, what is the earnings per share for 2018? Quickly, minus what?
158.4.
One what?
158.4.
158.4 divided by 158.4. So 2018, 158.4. What is the old for 2017? What do you have?
134.3. 134.3.
4.3 divided by 134.3. Bridget, are you still in this class?
Yes, sir.
That's fine. So what do we have? Earnings per share?
27.36%.
27. Oh, good. 27.36. When you multiply by 100, what do you have here?
33.24.
33.24. What do you have here? Quickly.
Minus 29.17.
Minus 29.17.
17.94.
Okay. 17.94. Right? So, how many percent did they want to achieve? I think it's about how many percent? How many percent?
10%.
Okay, coming. Just a minute. A minute, please. Okay. Okay. So the company want to actually achieve earnings per share, the industry average of 20%, of 10%. We need to compare, right? Is the view of the director correct here? It's actually correct in 2018, 2020, as well as 2021. So please, you can add your comments while we move on. Right? Please, I want to see the comments immediately after the class. Just send it to the platform, please. Don't send me DM. Don't send it to my DM, please. Send it to the general platform. Thank you. Now, what's next? This is 15 marks. This question is adopted from ACCA past question. Your analysis should consider both arithmetic mean and equivalent annual growth rate. So we need to consider arithmetic mean and equivalent annual growth rate. So before we go, right, this is 15 marks. So you earn your full marks, we need to consider arithmetic mean and equivalent annual growth. So that will take us to another step, arithmetic mean, right? So we will have arithmetic mean. Arithmetic mean first. Now, all of us in this class, we did which topic in this in math? Statistic, right? That they will say, oh, calculate mean, right? Mean means that you are adding everything together. Is that not so? You divide it by the numbers.
Exactly.
That is arithmetic mean. Is that not so? That is what we did, and that is what we will do here as well. Class, mean. What we know as mean is still the same thing. They just added English, arithmetic mean. Mean is mean. So we pick it up from what we did from the first place of nominal dividend. Please, you need to add, please, you will give me the figure for the growth, because you will add the nominal dividend from year 1, year 2, year 3, year 4 together, including year 5. You know, year 5 will be 0. Is that not so? Oh, we don't have anything there actually. So we can actually leave it for 4 years. Class, are we still together?
Go ahead.
Do we have anyone? Okay. So I needed to confirm that. So I needed to confirm if we are still together, if I'm not performing magic. So arithmetic mean, we'll start from the beginning, we'll add everything together, then we'll divide it by the numbers. That will give us the arithmetic what? Arithmetic mean, right? So we can have, sorry, I'm coming. That is 4 years. So please, you need to give me figure. Nominal dividend. We start with nominal dividend.
Excuse me. Are we taking 4 or 5?
Nominal dividend. You just pick the
It should be 5.
percentage.
It should be 5 years, though, not 4.
What's that now? Who is that? I don't understand.
You said we should take 4. What the directors, the chairman or whatever said is for 5 years. So if we take 4,
And that is the view of the director. That is the director. That is the chairman.
Yes.
Right? That is the chairman view. Right? Your own view as a financial expert. Right? And the question says arithmetic mean. Did you actually perform growth? Did you do anything growth in 2017? No, we didn't do anything. So that is the director, the chairman view. Right? That is the chairman view. Right? So what we calculate, we'll work with what we calculate, please. When I'm done, please. When I'm done. Yeah, thank you. So the nominal dividend, please, you will need to add 21.7. You give me figure 21.7, 4.5, 29. So we'll do it one after the other. So the nominal dividend equals to, okay, figure 21.7, right?
Yes.
Plus
4.5.
4.5 plus
0.
Plus
29.4.
20.
9.4.
29.4. So we didn't have anything in the last year. So divided by, how many do we have here? Divided by 4, right? 1, 2, 3, 4. Divided by 4. What do we have?
13.5.
13.9.
13.9.
13.9%. So we'll do the same thing for real dividend. So give me the trend for the real dividend quickly. Quickly.
Okay, 20.93.
Okay. 20.93. Plus
20.35.
20.35 plus
20 plus
23.9.
95.
No. It's 17.59.
17.4.
Abidemi, are you still in this class?
Yes. Just that I round up my figures, so that won't be different from yours. That is why.
This is the growth rate now. Is it not 17.4, 1.7? This is what you should call for me now.
Apologies.
That's fine. That's fine. Thank you. So let's go back.
17.44.
Okay. 17 point what?
44.
44 plus
1.75.
1.5. Okay. What do we have next?
Minus 4.53.
4 minus 4.53. What do you have next?
23.24.
23.24 divided by 1, 2, 3, 4 divided by 4. What do you have?
9.48%.
9.48%.
Yeah,
so after the real dividend, what do we have next? After the real dividend,
We have share
market
price.
price. Thank you. Share price, because your analysis should include arithmetic mean. So that growth rate, it must include arithmetic mean. That is what it means. Oh, right? I know you have question, right? Now, what is the growth? What is the growth rate for the share price? Quickly, when this class at exactly 10:30.
16 minus 16.4%.
Minus 16.4%.
16.4.
Right?
75.
Plus
75.05.
75 point what?
05.
Plus
5.01.
5.01. Okay, plus
33.46.
33.46, right?
Yes.
Divided by 1, 2, 3, 4. Divided by 4. What do you have?
31.22%.
31.22%. After the share price, we have earnings. Earnings growth. Right?
27.36.
27 point what?
36.
36 plus what do you have?
33.24.
33.24 plus
minus 29.17.
minus
29.17.
29.17 divided by 1, 2.
Plus,
okay, plus
17.94.
17.94 divided by 4, right? What do you have? What do I have quickly? Kudus.
26.93%.
Okay, 26.93%. Okay. So if you have question, you can mute your mic. You can just raise up your hand, right? So I can answer the question quickly before we move.
It's 12.34 now.
Having 12.34.
12.
Yes, 12.34.
12.34.
Okay. Please, do you have anyone that have question? If you have question, mute your mic. Don't forget that the question says that your analysis should include arithmetic mean. Is that not so? So is your trend that you will use for your what arithmetic mean, right? You don't need to like add it together, just separate them like this so you earn your free mark, right? That is what the question says. Let me quickly show you again so that you see that it is not magic. It is what the question says, right? Your analysis should consider both arithmetic mean and equivalent annual growth rate. Is that also? So this analysis that you did here, this growth rate, this trend should include arithmetic mean. So which means that you have to do an arithmetic mean for each of these. Then after that, you cannot do the equivalent annual growth rate. That is what that is what it means, right? So, Kudus, quickly.
It's not a question actually. The share price is not correct. It's 24.28. The 16 is negative 16. The share price.
Okay.
The 16 is negative 16. So it's supposed to be 24.28.
24.28. Thank you. Thank you. Do you have anyone that have any other question? Any other observation? Can we move?
Yes, I have, sir.
Okay, what's that?
Okay.
Quickly, just
my
quickly
question
go
is
ahead.
concerning the nominal dividend growth rate. You see, in between the years, we are having in third year, we are having 0, and we are considering the year as part of the number of years that we use to divide it. But in the last year, we are having 0.
No, we are not
considering
having 0. Let me cut you. Sorry. In that last year, we are not having 0. We are having nil. Because we were not given the base year now. So we didn't do anything in that last year. So it is not 0, it's nil. Right?
Okay.
It's nil. So it's nil. Let me use this like this. So you see that it is nil, right? The last year. Thank you. Any other one? Do you understand? Did you, right?
Yes.
Okay.
Thank you.
Thank you. Any other question? Okay. Oh, wow. Okay. Quickly, let me quickly complete this before we go. Right. So and we need to continue, right? Maybe when I'm done, but please. Okay, quickly, ask your question quickly.
Thank you. It's not really a question. Like, I have a suggestion for each computerization of the solution Excel sheet. So we split. You make use of the Excel sheet for the calculation. So you split your screen. We'll be able to read the question side by side alongside with the solution to the questions.
Bashirat, that is why you need to. But that is why, as an individual, if you truly mean this FM, as an individual, I expect everybody to have the material. Just have it.
Honestly speaking, I have the material. I just thought it would be easy and better.
Sorry.
I have the material. If that is the case, I have it.
Okay. That's fine. But I can't.
I don't have it. Where was it shared?
So what you just do is that just make sure you print it out. You get. So that is what I can actually do. I can't go to that Excel and start. It's not that I can't do it though, but no. I just want to use Word, and that is what I've been using. I think I did that last diet as well. Do you understand? So, but that's fine. It's a very good suggestion. Thank you so much, Bashirat. So, the next one is what next? Equivalent annual growth rates. Equivalent annual growth rate. Now, how do we determine the equivalent annual growth rate? There's a formula you need to use. Equivalent, right? Annual growth rate, right? Equivalent annual what? Equivalent annual growth rate. Equivalent annual growth rate, for you to get, now, there's a topic in cost of capital, right? That when you want to determine a growth rate, there is a formula for that. We'll get there. But for the purpose of this class, I will just give you the formula and tell you that it is growth rate formula. Class, are you with me? For the purpose of this class, I will just give the formula that it is the formula for calculating growth rate. Class, when we get to cost of capital, we'll explain, you will see the formula self. You see it, then you now remember that we actually use this formula under the objective of a financial manager. And what is the formula? Do I have it here? N minus 1. Sorry, I just want to, do I have it here? Okay. Minutes. N minus 1. The current minus L divided by the LS. I'm coming. I need to copy the formula out. Okay, let me copy it from this cost of capital question. Okay. So this is the formula. So it is not, you can use current year, current year, then you can use LS year. Class, what is current year? Current year means the current one. Is that also? The earliest year means the base year. Let's say we have, let's say for instance, let's start from the nominal dividend. Now, the current year for the nominal dividend, 2021. Now, the earliest year, if you want to do it, the earliest year, we will say the earliest year will be your 2017 class. The current year is 2021. The earliest year will be 2017. And don't forget, anytime, any day, you want to determine equivalent annual growth rate, right? There are two formulas you can use to determine growth rates, but for the purpose of this class, this is only applicable. When we get to cost of capital, you understand this formula, right? Now, you cannot use the formula, your trend. Now, let me establish that. You cannot use that trend, what you did in your trend, to determine equivalent annual growth rate. Do you know why? Because the earliest year, you cannot get the earliest year, because the earliest year is 2017 and it is 0. It is not possible, right? In equivalent annual growth rate, equivalent annual growth rate means that, is there any growth in the real dividend per year, or is there any growth in nominal dividend per year? Is there any growth in share price per year? Is there any growth in earnings growth per year? So in this case now, class, you cannot use what you use for your trend to determine equivalent annual growth rate. We have to go back to the original data, right? We have to go back to the original data. So let's start from the nominal. Nominal dividend equals to, now let's quickly go back to the original data where we have the figure. We want to start from the original data, right? Dividend per share. Can you see the dividend per share? 28, 22, 20. You can see that there is earliest year here, which is 2017. That is what we use when we want to determine equivalent annual growth rate. Class. Now, using that formula of extrapolation, it's called extrapolation. When we get to cost of capital, you will understand that formula better, right? Now, this is the current year. For the dividend per share, what is the current year? The current year is 28. Why? Earliest year is 17, right? The earliest year is 17. Now, what is the numbers of years? 1, 2, 3, 4, 5. It is 5 years. It is what? It is 5 years. So therefore, you can come back and say the earliest dividend, the numbers of years, or we say the numbers of years is 5 years. Let's start from the dividend per share. Dividend per share, right? So the current dividend from the dividend per share, what is the current dividend from the original data? 28 point what? 28 point what, class?
Only
28. Okay, 28. That's fine. 28 divided by the earliest, which is 17. The earliest is actually what? 17. Right? The earliest is actually what? Is actually 17. Coming. Please mute your mic. Who is that? Person to mute his or mic, please. When this class has exactly maybe 10:20, 10:35 or 10:30, please. So we can go. Okay, class. So when you check this, right? 5 minus 1, that is 4. You will know the reason why you minus 1 when we get to cost of capital. There is a reason for that. So we can have here for the dividend per share. Okay, that's fine. I think this will take me. Let me just quickly round up this part. Okay, so please, this will give you 4, right? Now, 28 divided by 17. Right, what do you have? So 28 divided by 17. 28 divided by 17.
1.65.
Okay, what is the fourth root? What is the fourth root of 1.65? What is the fourth root?
5.14.
What is the fourth root? 5.14. 5.14 minus 1.
No, that's not correct. So the fourth root should be 1.13. 1.13.
1.13. Abidemi, well done. Minus 1.
Okay, correct. Sorry.
Equals to Franca. Are you still in this class? Are you still with us? Okay, that's fine. Okay. So what do we have? 1.13 minus 1. What do you have? What do you have?
0.12.
0.13, or how many percent? Or 13%, right? So now, when you want to determine equivalent annual growth rate, you use it is computed using the original data. Because of the earliest year given from the formula, earliest year. Earliest year is 2017. And from the trend that you did, you cannot estimate, you cannot ascertain earliest year. What you need to do is that let's go back to the original data. Use your original data to do that. And I said, the reason why we use this formula, when we get to cost of capital, you will understand more, right? You will understand this formula, right? It is called extrapolation under the what? Under the cost of equity. You understand it, right? So please just take it like this, that this is the for, this is the what, this is the formula. So, 11. Okay, that's fine. The next from what we're given from the original data, earnings per share. We'll do the same thing for earnings per share and price earning ratio. Earnings per share. Let me quickly do earnings per share. Then you can calculate for price earnings ratio. That is your second assignment, right? Assignment 2. Earnings per share. Earnings per share. Oh, wow. Okay, 10%. 10%. Okay, let's see. Let's quickly round it up with this. Okay, earnings per share. We'll do the same thing for earning per share, right? We can have okay. What is the current earnings per share? The current year. What is the current year?
190.40.
190.4.
190.4. What is the base year? The earliest year?
134.30.
134.30. So just give me final figure. What is the final figure?
$1.42.
Okay, 1.42. So you can complete it. You can complete the price earning ratio, right? So distinguished professional colleagues.
9%, so not 1.42.
You do that one. Yeah, you do that one.
It's 4 truths, not 4 times.
You do it. Thank you. Anyone could do.
No, that's the division. That is the division, not the.
So on this note, please complete it. You can see the B part of this question. Please, I need your suggested solution. First, your comment. 2, the earnings per share, the price earning ratio. 3, the B part of this question. For those who have actually paid for the material, I will update the material with what we have tonight, right? So on this note, we are done with objective of financial management. Then we are good to go to another topic. Either we move to working capital or cost of capital, from your cost of capital to investment appraisal.
What did I do?
Enjoy the rest of your night.
Good night, sir. Now for going to follow 5 times.
Please, how did we get the fourth rule to use a calculator?
Okay, which calculator are you using?
Your calculator matters. Your calculator matters. I also made mistake, but I think I've corrected my mistake.
So if you are using cash calculator, just press shift and there's this function on calculator, S raised to power box on that calculator.
Exactly.
Okay, shift X raised to power box.
Yeah. So it will bring a box before the root. Then in that box you put 4, and inside the root you now put the value.
Okay.
Please come again.
So from your calculator, you press shift S raised to power box. The S raised to power box is on your calculator. You just press shift S raised to power box.
In order to understand, can you just do it in a video and send it to the group so that he can understand? Do you understand?
Okay.
Thank you so much.
Thank you. Good night.
Night.
Bye.